Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. Just a quick word on the Australian unemployment number came in at 3.7%. That's still a fantastic number by historical standards, but it is a bit of a leap from the 3.5% we've been used to of late and caught many an economist by surprise. I've been warning for some time that the employment outlook was not good, particularly as we return to really an influx of flood. A new wave, if you like, of temporary workers, travelers, students, etc., and also massive build-up in immigration. It's already occurring, and plans are for even bigger numbers to come. So what happened during COVID is a lot of people who weren't in the workforce or were medium to long-term unemployed, suddenly they could get jobs, and they took those jobs. And so the unemployment number looked really low. But the whole time through all of this, I kept saying that's an artificial number and it's due to the travel restrictions. And once they lift and people get comfortable, it would take people a little bit of time to get comfortable with traveling a long way from their families, given the dislocation that had previously occurred during COVID. So it took a little bit of time to warm up, but certainly people are on the move around the world again. Good for them, good for us. That means, though, that there's greater competition again for the jobs in Australia, the existing jobs in Australia. So that unemployment level is probably a lot of people who had jobs who are starting to get displaced by this new wave of travellers and immigration again, as well as for a whole host of other reasons, of course. But it does mean that we're going to start to have the, if you like, real unemployment level revealed over time. And because this could happen rather quickly, and because of various government policies at the moment and the policy of the Reserve Bank of Australia to keep raising interest rates, which I expect it will continue to do. I mean, at the very first hike, I said they would probably go to the 4.5 to 5.5% range, and we certainly look like we're heading well above 4 at this stage. So further interest rate hikes to come from the RBA, and they will not at all be slowed down by today's unemployment numbers, because they've been expecting higher unemployment than they had been seeing with the rate hikes they've already delivered. So they will be perfectly comfortable with an increase in unemployment even to 4% or higher. My year-end forecast for unemployment, because I see this as a long-term historical bottoming of unemployment and only just beginning to turn up, it could be this fast actually, but certainly next year, but it could be as fast as by the end of this year, Australia has an unemployment rate of 4.5 or even 5%. Certainly that is the risk direction, unfortunately, for the unemployment level, but it's an inescapable outcome of the various policies of government, high immigration, central bank raising interest rates. The economy is slowing. It has the post-COVID hangover effect that I forecast some year and a half ago, and that's certainly well in play now. So I think we're going to see ongoing softness in the Australian economy with ever greater numbers of people looking for work. That means much higher unemployment for the Australian outlook. Impact on markets. At first, equity markets like to think, oh, this is good. It means the RBA won't hike as much. No, the RBA will totally ignore this number. Well, it won't totally ignore it. It'll acknowledge it. It'll pay lip service, but it will continue to hike rates. It will remain focused on inflation, core inflation, and we're seeing increasing signs of a wages spiral development, prices spiral development, and I did forewarn of that as well. So the outlook for equities is a momentary bounce on this sentiment idea of bad news is good news, which is really a load of rubbish, but it has the ability to run for the near to medium term, and then in the longer term, and perhaps the longer term may only be a few hours. But certainly over the next few days, I think people recognise this is not a good sign for the Australian economy and second guess their equity portfolio levels, although a lot hinges on what's happening with the US debt ceiling, of course. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.